You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.
Hello. Welcome back to another episode of The Builder's Mindset. Okay, I'm going to try to keep today short because I have a crazy idea that I wanted to share with all my listeners and see what you guys thought. All right. So I imagine that my listeners range everywhere on the political spectrum. And most of you, if you know me personally, you know I probably self-identify a little bit as a libertarian. And probably, dare I admit it, I'm getting more conservative as I grow older, just like my dad said. If he were still alive, he'd be looking at me telling me, I told you so. But so much talk about interest rates, particularly mortgage interest rates, right? We're all waiting for them to come down, Why do we want them to come down? Well, if interest rates come down, housing gets more affordable. Profit for the large builders who are buying rates down goes up. And then the smaller builders or the private builders can start to be a little bit more competitive. And we can free up a little bit of demand on the overall system, because if I'm looking to buy a home and I'm going to buy a resale home because somebody's got to sell a home, 7% is pretty steep right now in a lot of markets with the prices where they've got. I believe the average home price, new home price is $460. I haven't looked up the average in quite some time, but that's tough. People aren't used to that. They don't remember the 80s when first mortgages were 11, 12, 13%. And so I think everybody agrees that lower mortgage rates would be helpful. Do we need to go back to the days of 2.5, 3.5? I don't believe so. I believe that 5 is a good sweet spot. Why do I think 5 is a sweet spot? Most of the large public builders have been buying their rates down to about 4.99, some a little lower, some a little higher, but kind of right there. We'll call 5, right? That's where, and they've been able to keep selling homes. Okay. Fourth quarter looks a little off, and the pundits and the news, you're going to see tons of negative headlines in the next couple of months as all the earnings reports come in, and everybody's missing their sales because of, really, in my opinion, it's a combination of all those things, but the big election pounced on that. And so they're all going to talk all about that. But I'll tell you is that's not the end of the world. Okay. It's the affordability combined with the interest rates where they are. So here's my crazy idea. If we know, and I said in one of my previous episodes that John Burns put out a chart where they kind of showed that 5 to 5.5% is sort of the unlock. It's like the non-chaotic. It's like it just gets the level of percent of people who want to buy, able to buy, to a place where we start to flow a little bit better. Case in point, why builders are selling homes, buying rates down to 5, is if we get to that point, things will start to flow a little bit better. So here's my crazy idea. I know there's a lot of talk, and some of my folks who are anti-big government, and I don't know how this will go over with the DOGE, the Department of Governmental Efficiencies, but just hear me out for a moment. What if we did this? What if we took mortgage interest rates out of the equation for buying a home from this perspective? We don't get rid of Fannie and Freddie. We morph them. We create like some sort of bond-backed mortgage program through the government, because we admit it is good for all of our constituents of the United States to have access to the credit necessary to access the American dream. Now, does that mean if I have 3% down and a 580 credit score that I get the same rate as somebody who's got 25% down and an 800 credit score? Absolutely not. But what if we created a matrix that took into account your credit score, your debt to income, your percent you're going to put down, what you're looking to buy, plug all these into a very simple formula. Actually, I'd prefer that I do it, and I'll put it in an Excel spreadsheet, because if we let somebody at the government do it or some software guy, it'll be so complicated nobody will understand it. But I mean, you should literally be able to go to, and here's my plan. You go to a website and you put in your annual income, you put in the price of the house you're going to buy, you put in your down payment, and your credit score can automatically get pulled. It's pretty available these days. And you will be if you qualify, like there'll be a threshold, right? Like, so there'll be a point like we're like, this is no good. We're not going back to subprime days, but like we'll go to this place where like, nope, if you're this or this or this, like there's going to be a bar at the bottom. But what if we said interest rates are just going to be between 4 and 6%? And it's based on this matrix, and that's it. And then we can get rid of the mortgage insurance in perspective, because we can tie it into the overall cost, and somehow like as it floats down, you could put it just into the percent of things that like factor that risk in there a little bit rather than having it, you know, smacked on top of it. Like, come on, the FHA thing, you know, if you're FHA and you're under 20% down, you're paying double mortgage in insurance. That just seems onerous to me. So, and then we always advertise, whenever you look at the advertised mortgage rate, it's always the FHA, which is the lower number. But when you look at the actual, after you tack on that other stuff, it's really not that great of a deal. So, but what if we did that? What if we had a fixed rate government-backed mortgage program? And that way people had access to that American dream on a level playing field. And this is not a for-profit thing. This is really just to drive the housing we need in this country. Do we maybe also think that people might be more willing to have kids and repopulate this aging country that we have, demographically speaking, if they knew that whenever they were ready to start a family, that their mortgage rate was going to be between 4 and 6%? And just think about it, like if you're 20 years old right now and you're like, God, I don't know, like if I'll be able to afford or buy a house or whatnot. What if we could take that out of the mix? So I don't know. It was just this crazy idea that I had, and I thought I would share it with all of you and see what you guys thought for that. Okay? So let me know what you think. This looks like this is going to be the shortest episode. Look at this. Maybe this is a win. So once again, I think if we could take that out of the mix, we could alleviate a lot of the variability and the vulnerability people feel when they're trying to decide whether they're going to buy a house or not. Wouldn't have to worry about the rate locks and all that other BS that comes into play. Here's what it is. Here's how much I'm putting down. Here's how much the house is. Here's my credit score. Here's how much I make. Oh, you're 4 3/4. Oh, you're 5 1/4. Okay, perfect. You know what else it would help? And this may or may not go over well. And this would depend on how we're going to play it. So would there be the ability to buy it down? Like, right, you could buy points down, pull things down, and builders are doing that. Would we just eliminate that from the system, or would we still make that available? Because if you eliminate that, you know what else you're going to do? You're leveling the playing field between the large public builders who can afford that $25,000 to $50,000 to buy down from 7 to 5. You're actually leveling that playing field with those smaller builders who can't afford to do that. So that, in my opinion, might help the supply. Because if I can be a little bit more competitive with the large builders in my market, it gives them a sense of security, in my opinion, as well, too, as if I build these and they come, I'm not going to lose this sale because I can't offer as good a rate as the big builder because I don't have the same margins that they do. So something to think about, you know? So fixed rate mortgages. What do we think? Am I crazy? Well, we know I'm crazy, but is it a crazy idea? Like too crazy to even consider? Let me know what you think. And I hope you enjoyed this episode. I hope you're enjoying it. We're enjoying putting them out, and have a great day. We will see you or talk to you next week.
You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.